there, day traders. Welcome back to Fides Trading Channel, and we are back again with another Fides Flows video. Today is Thursday, the 3rd of July 2025, and if it's your first time joining us in these Fides Flows videos, I do a deep dive into the price action and fundamentals behind gold, Nas100, and Us30, giving you a clear roadmap for the trading week. Using high time frame technical analysis, I identify key zones, momentum shifts, and trend structures, and then combine that with real-time macroeconomic drivers like interest rates, inflation data, and market sentiment. So whether you're a swing trader or day trader, this breakdown helps you understand what's really moving these markets and where high probability setups might form. We are starting with gold on the 4-hour chart, and we can see that gold is currently priced at 3345 after it had a bounce from the 3250 level during the Asian session on Monday. And we can see that from this bounce, we bounce all the way back to 3,350, where price is currently in a consolidative mode. We can see that price is currently testing this level, and as it was the previous lower high of the bearish trend that we were tracking from the weeks prior, I would say that the markets are currently determining if the bulls are going to step in and actually break back out to the upside and continue the bullish trend, or if the bears are going to hold their ground and keep pushing this market further down. As it stands, price bounced from the 200 SMA here on the 4-hour chart, and we can see that price has broken above the 21 and the 50-day SMA and continues to trade above both those levels, which gives rise to further bullish confluences. On top of that, we can see that the market has shifted back into bullish momentum per the RSI. As we can observe, we are now trading above the 55 level within the bullish region of the RSI zone. This adds another level of confluences that the bulls are taking control of this market. But despite this, we still have to observe the consolidatory nature that we are seeing here. So going down into a lower time frame, we are now on the 1-hour chart. What we can observe is that price had that massive bullish move to the upside on Monday and Tuesday, and now we have support at 33334 and then resistance at 3357. So price trading within the zone, we need to wait for a firm break either to the downside or the upside of those levels before we determine the market directionality. Because as it stands, the market has seemed to have found some fair value in this level, and we will need to wait for a break of this particular range that the market is now trading in. So just highlighting that right there. So no trades, I would say, for today until this level is broken. And also to mention, we have NFP release in the next half an hour, so do keep an eye out on that, as it will be an important indication of which direction this market could potentially travel in. Also noting that futures price is currently at 3356, while current price is at 3345, which is an 11-point difference, adding further bullish confluences. Futures price just indicates where investors are potentially positioned for future moves. Moving into Nas100, we can actually see that it is currently priced at 22654 and is currently trading within a range. We also note that after the massive bullish push that we had from last week, where the markets just obliterated the resistance levels, it seems to have found some consolidation as of this week between the support at 22,400 and resistance at 22,700. As it stands, all price action structures are still intact with higher lows and higher highs respectively. Price is currently trading comfortably above the 50 SMA and is actually using the 21 SMA, as we can see here, as a platform to bounce from. So it's a good idea to keep an eye on that 21 SMA for potential bounces or potential breaks. Adding further bullish confluence to this market, we can see that despite the overextended nature of this market at the opening of the week, since this consolidation, the market has retraced and has moved back within that sweet spot region of the RSI between 45 and 55, and is now comfortably trading above 55 within the bullish region of the RSI, which gives rise that bullish momentum is still very much intact and that the market is currently in a bullish consolidation. I still have my eye on further upside movements in this market, and we will be waiting for the 22,400 level to be tested, where I can then get a potential entry and ride that position to the upside beyond the resistance at 22,700. If market keeps coming further down, I'm also eyeing out the 22,116 level, as this is a major support level. It is a major pivot zone that I have marked out. Should markets come back there, that would be my next place to take a long position from. Taking a look at US30, we can observe that US30 has been a lot more bullish than its counterpart Nas100. And we can actually see that this bullish momentum has continued into this week, especially on Tuesday, with a strong bullish push in this market. So last week we had massive bullish movements from the bounce at the pivot level of 41,700. From that pivot level, price had actually bounced from the 200 SMA, broken above the 21 and 50 SMA, and has continued a very strong bullish trend with very minimal pullback levels. For this reason, I am expecting some sort of retracement in this market because as it stands, we are very far removed from both the 21 SMA and the 50 SMA, and we are trading in the overextended levels of the RSI, currently above 70. So I would be expecting some type of retracement to the sweet spot. Now, that being said, the levels that I am looking at for this potential bounce is at 44,166. If markets do drop further down, I could expect to see a bounce at 43,150 or the potential pivot level, where we also have the added confluence of a bullish trend line at 42,850. So as it stands, the market is showing signs of bullish consolidation, as we can see here. We're just going to drop into a 1 hour chart. We can see that the market isn't making any sort of movements today. It does have a resistance point at 44,690 with resistance at 44,455. The market is moving within this very tight range. I would be expecting a break either to the upside or downside, and we could see a further push from this exact level. However, I see these points here at 44,150 or 43,150 as potential points to bounce from. I would also note that price here on the 1 hour time frame is within the sweet spot. It is very close to 50 SMA. So if we do see a bounce from here, I'll be more than happy to take a long position, provided I get a very strong bullish candle from the market, a bullish close on that candle. Something similar to what we see here, where the market actually consolidated, and then at 3 o'clock on Tuesday, the July 1st, we can see that we had a strong bullish engulfing candle and then further push to the upside. So I'll be waiting to see how price reacts to the NFP release, and if I get this sort of signal out of a 3 o'clock or 4 o'clock candle, I'll be more than happy to take that trade to the upside. Taking a look at the VIX index, we can see that we are currently trading at 16.77 from the opening of the week at 17.18. So not much movement from the VIX, which indicates that investors are sitting on their hands, but are still in favor of investing in indices as well as risk. This supports that investors are comfortable with taking risks while supporting bearish gold and reiterating bullish indices. Fundamentals for today include the release of the NFP, so expecting massive moves from the markets. I'm in favor of bullish indices with bearish gold. However, I'll wait to see what market directionality the news provides. In terms of headlines coming out of FX Street and TradingView, overall sentiment for gold is that of neutral standing. We're seeing the articles talking about gold being flat and that the potential bullish rally is done, with minimal headlines for further bullish movements from gold. So kind of bearish sentiment coming out of gold despite the levels that are being created. In terms of indices, Indices are highlighting new highs, are still highlighting new highs which are created from Nas100 and the S&P 500 indices, confirming the 10 million increase during this bullish push to the upside which we saw last week. And this is based upon the shaky ceasefire and the risk on sentiment. This is not my financial advice, but my personal opinion on the current state of the markets. Before taking any positions in the markets, please make sure to do your own research. If you enjoyed this video, please like and subscribe, and I will hope to catch you in the next one, traders. Happy hunting, and I wish you a successful trading day ahead.